Hey everybody, Boris speaking for us. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for September 24th, September 28th, 2018. And the story in the commodity dollars this week was big recovery. Recovery actually across all the sectors, but most impressively, I think, in the Antipodeans, in Aussie and the Kiwi on a risk basis. Very much surprising, I think, in some ways, at how strong the recovery was. And I think having recovered to these levels now, we can comfortably say that at minimum, they've set in an intermediate term bottom. We'll take a look at the charts in just one second. But here are the levels. We certainly moved up on the levels from the week prior. We're at 72 support now, 73.50 to the resistance in the Aussie. The Caddy has really been breaking through that 130 and hammering it down. It looks like it wants to go even lower despite all the NAFTA stuff. I'll get to that in just one second. And Kiwi, very positive GDP data that really provided a nice big spur, not taking us above the 66, with 67.50 now looking to be the big resist point as we move ahead. On the calendar this week, it's basically RBNZ as the only major commodity dollar event on the front of the week. Not really going to have much of an impact. They were clearly very, very dovish before, but I don't think this particular event is going to have much movement either way. If they are as dovish as they were before, it's already expected in the marketplace. If they improve their commentary, it actually could provide a small boost, I think, to the pair, because the market is positioned to the negative, to expect negative stuff from the RBNZ. So even a neutral stance will be viewed, I think, as mildly positive. Moving on to the end of the week, the only other major COM dollar event that we have here is the Canadian GDP data, which we're bullish on. This is, I think, Friday. Yeah, it's Friday. We're bullish because we've had much better trade balance and retail sales numbers. Canadian data has actually been very strong, and this is the interesting thing here. So here's the story on Canada and how Canada differs markedly from UK. The NAFTA story in Canada is not an existential threat as Brexit is to UK, simply for a couple of reasons. But number one, if the NAFTA situation fails, it still pretty much preserves most of the trade relationships that we have across the border for the time being. Secondly, there's no way U.S. Congress is going to allow Trump to sign a bilateral deal with Mexico and not include Canada. Even with the rubber stamp Republican administration, which is very unlikely not going to keep by November, even with that Congress in his pocket, they're not going to rubber stamp a NAFTA treaty bilateral simply because too many Republican senators and congressmen live very close to the Canadian border, are going to feel massive wrath of their constituents if they do not include Canada in the deal. So the two sides notice there, that's why the Canadians are playing it cool, and that's why Trudeau is basically saying they'd rather have no deal than a bad deal, because they know that the risks are as much to the U.S. side as to the Canadian side. In the meantime, the underlying data in Canada is super great, which means that the Bank of Canada is the only other central bank besides the Fed that is consistently raising rates. So if you lift the NAFTA threat away from Canada, it really makes the loonie a very interesting bid. And to that extent, that's why you're seeing the loonie much better bid despite all of this back and forth NAFTA news than you would think it would merit. Let's take a look at the charts here and just see how everything shapes up. So let's just look at Caddy first. Caddy, you can see, here's the impressive part about Caddy, first of all. If you look at it longer term, clearly the bias is to the downside. We have a series of lower highs, lots of failed counter trend moves. We took out the 500 SMA this week, which was bullish. We took out the 130, which again was bullish for Canada, bearish dollar CAD. We are holding at this support here at 129, but if that gives way, there's nothing to hold us back until the 28s, 2750s even. So it really opens up a pretty strong path to the downside if you just get even a modicum of positive news on the NAFTA front on the Canadian story. Now, Kiwi and Aussie are just sort of a longer term, very strong bottoming process here. So the Kiwi has put in a beautiful W bottom formation. And I think at very minimum, you can feel relatively confident that it's going to just simply range trade. So Kiwi to me becomes a buy to dip type of a story with 65 or 60, 64, 75 as your terminal stop. Because even if it does come in, I don't think it breaks the lows. I think it just simply consolidates for perhaps a secondary move higher. The big resist here is the 67.50, 68 area. it would be impressive if it made that move next week. I don't expect it to, but I think the consolidation here is essentially a buy to dip consolidation rather than a serious fade, because the overall trend looks like a bottoming process ready to come back up. Same story with the Aussie. Aussie looks like a nice bottoming trade as well, although it could retrace back down towards the SMA at 72s. Still, this 7100 really held steady. As a matter of fact, 7150 really held steady against some very negative news that we had this week on the Chinese tariff story. And the fact that we shrugged that off and traded well post news suggests again that I think sentiment has changed. It's a buy to dip story, both in Aussie and Kiwi, and it's a flow story in CAD if we can break that 29. That's how the COM dollar is set up. Wish you guys the best luck, the best of trading. Boris Schlossberg over and out.